So, good morning and welcome both to my panelists and to our viewers out there. I hope you had your morning coffee and are now ready to rock with us in our Gender Lens panel. Before I start here, a big thank you to Hans-Peter for having us and for working hard to aim for a gender balance amongst the speakers as well. It was sure a tough exercise, but he and his team managed well and much better than other event organizers. So I do hope people will take a note of this. And welcome both to my panelists. And now I have a technical issue, which is because we are live. So this is live, sorry. And of course, a big thank you to Mario for all his excellent support. Now, my panel of experts today covers the topic Gender Smart Impact Investing with a Gender Lens. We are strictly on a 50-minute time slot, but we are, of course, very keen to answer any of your questions towards the end and make sure we have enough time for it. So please make use of the Q&A section, and we do our best to answer everything before our time runs out. Now, I'm very pleased to introduce my panelists. You will see their detailed CVs below on your screen. So I've asked the ladies to introduce themselves with a little statement. So welcome to Julia M. Profeta Johansson, founder of Ella Impact.
Thank you, Manuel. It's a pleasure to be here with you this morning. So Ella Impact is a network of women that globally connect to discuss the topics of impact investments in businesses. And I'm also the co-founder of Conscious Growth, which is bringing revenue-based finance and more impact to the mainstream from a investment perspective. And for me, it's so much about tapping into the other 50% of the resources of the world to really unlock more value to everybody through gender lens, gender balance, and gender equality.
Great, thank you. We have another Julia here, Julia Beverunge, Associate Vice President of Institutional Shareholder Services ESG. Good morning.
Good morning, hello. So ISS ESG is one of the biggest data providers for ESG. And within ESG, gender data is super important. I think we're going to talk about that later. So I'm very excited to talk about gender investment with you in general today. And I think that we cannot afford to not consider investing into half of the population.
Great, thank you very much, Julia. The next welcome goes to Catherine Milligan, Head of Gender Diversity at Bamboo Capital Partners, a Swiss-based impact investing firm. Good morning.
Hi, good morning. Thank you, Manuela, for that introduction. And thank you to all my panelists. I'm really looking forward to this. Yeah, and to get us started, I thought of my statement and what I wanted to communicate is that I've been passionate about development and equality all my life. And I'm equally passionate about, entrepreneurial market-based solutions to solve social and environmental problems. I've had the privilege of coaching, mentoring, supporting social entrepreneurs, men and women, in their journey to impact over many, many years. And I feel privileged to be a part of that journey. So looking forward to being with all of you today.
Great, thank you. And last but not least, a lady that hardly needs an introduction into the impact world and space, Hedda Paulsen-Möller, founder and CEO of Time.org, Advocacy, Advisory, and Education. Hedda.
Thank you, Manuela. Good morning, everybody. Bringing up the rear here. I'm an impact investor, and my organization, Time, helps people get on the journey of sustainability, ESG, whatever they need to understand that they have a positive and or negative impact with all their decisions, particularly their investment decisions, which I think we tend to disconnect from our values. So as an impact investor and focusing on DEI, diversity, equity, and inclusion, tackling gender-based issues and looking at the narrative around women and girls, which is 50% of society. If we can't correct that, we're going to have trouble addressing other minorities and achieving the goal of really valuing and understanding the value of diversity. So very passionate about this topic, going through my own personal journey from gender blindness to being gender positive. And I think hopefully we'll have a really good discussion today and learn from the different perspectives and give some tools for other people to get on their journey.
Perfect. Thank you. So, and I am Manuela Fröhlich, your moderator today, a co-founder of Vorfrauen, the largest German-speaking female career network. And I also recently joined global impact asset manager Thomas Lloyd Group in Zurich as a managing director. So now my passion for that becomes also my professionality. So that's perfect, and I love it. And we'll start, shall we? So the business case for gender equality and women's empowerment, particularly its critical role as a driver of growth and innovation, has strengthened over the past decade. A growing body of research shows how greater gender diversity in companies lead to long-term value creation, stability, and even greater returns. At the same time, ignoring women as consumers, a group responsible for 70 to 80% of consumer decisions, means missing out on 1/3 of the world's private wealth. Gender lens investing is a really powerful approach with the potential to change that. And today, we would like to bust some of the myths around it, like being a niche market, having to reduce performance expectations, or that it means just counting women on boards. We will look into the chances, opportunities, and challenges along the way. So to warm up and bring our audience all on the same page, we would like to start with some definitions. First question to Julia J. Julia J. What is gender smart investing, and is there a difference to gender lens?
Sure. So I think that people tend to get a bit confused. We use like gender in so many dimensions and with so many like different like meanings and angles, but gender smart is actually the larger ethos around what we're talking regarding gender lens, right? So how is it that we incorporate the understanding that like men and women are impacted, affected, benefited differently from like business models, investments, and so on? And then the gender lens is the actual implementation. It's like the gender smart perspective in practice. And here I would say that I also have like an additional like take to this, which is like the gender balance that I spoke about like previously, which is understanding that it's not only that we experience services and products and investments differently, but we also have complementary skills, views, and perspectives that when brought together, they really can be so much more powerful in any decision-making process. So a little bit for definitions here and not to take so much time.
Thank you. Catherine, would you have something to add?
Sure. Yeah, Manuela, you alluded to this already in your intro, but look, the rationale for incorporating gender lens into investment decision-making is clear, uncovering overlooked investment opportunities, mitigating risk, providing a way to achieve better social and environmental outcomes. You also referred to busting, myths about this being niche. According to Catalyst at Large, gender factors impacted the management of nearly 132 billion in money manager assets and 397 billion in institutional investor assets, as recently as over the past couple of years. What I want to add to complement what Julia shared, and I think what's important to communicate, is that this is a spectrum. And, some funds lead with gender, but, and some lead with sectors or themes that they invest in. And their gender lens is important, but not necessarily the most important thing that they want investors to know about their funds. And that's okay. This is a broad tent. The other thing, there are multiple ways that in terms of implementation that Julia referred to, that this can be operationalized. So it might be incorporating a gender lens within the investment process. So how do you source pipeline? Who do you invest in? It might be looking at investing in companies with an intent to address underlying gender issues and opportunities in their own firms and in the markets they serve. And it might be investing in businesses that have fair representation of women in staffing and management and in the boardroom. You referred to that. And it might also be investing in businesses that offer products and services that improve the lives of women and girls. So as you see, sort of that how there is a broad spectrum and a broad range. And I just want to add that as well.
business case numbers in there, and we come to that later. So what exactly is the criteria to invest with a gender lens, and how can this be allocated within an investment vehicle, whether it is financial assets or real assets? Would love to start with Julia B here, and then Hedda from her perspective as an investor.
Mhm. Thank you, Manuela, and thank you for the prior discussion points. I think they were already catering into this point, because what we see at the moment in gender lens investments is that there is already a diversity catering to this diversity. So having worked as a consultant with different asset managers and now as a data provider with more, I see that gender lens investment is nearly as colorful as the topic itself. So as was said before, you have investors who say, okay, I want to make sure that the investment is really catered towards empowering the women who need it most. And then you have investors who say, we just want to make sure that there is kind of a balance in between. What I thought was very interesting in the past couple of weeks was that I saw a shift and an empowering movement in some of the German investors. So there were a couple of ones who said, okay, historically, there are those church values. We don't invest, for example, in abortion or in clinical trials for female health. And they built a whole fund around saying, okay, we don't want that anymore. We actually just want to invest into those companies. So I thought that was a very interesting allocation, and I just wanted to share that with you all.
Thank you. Hedda.
Sure. And I'm going to point out how interesting it is to sit on a panel of women, talking about gender balance. I don't think we managed it here on this panel, but the experts in the field here who all have the same outlook. We're all wearing the same glasses, and we've taken our journeys to get there professionally, personally, and realizing that it's not going to be bad for us to reiterate points that the others said, because a lot of the people that are listening to us today are presumably quite new and trying to put on their own set of glasses. So I'm gonna pick up what Catherine said, that, this gender lens investing, which people have an idea that it's a very simple model. Well, it just means, capital passed to women entrepreneurs, for example, or women on boards. It's very important to stretch your imagination quite far when it comes to gender smart investing. And Julia explained a little bit. Gender smart is it's a investment strategy, and the lenses you can use has to be fit for purpose. So if you talk about it as an investor in my own personal investment journey, which is across asset classes, I have the requirement that I want to avoid harm and move towards contributing to solutions. So another point that Catherine mentioned that I think is interesting is that some people have an implicit gender lens and others have a very explicit one. And if we talk about market sizing, I saw a study from the US SIF that said that there's like 800 plus billion that's mobilized with some type of question in the investment strategy that addresses gender, versus, again, Catherine, you mentioned Catalyst at Large. We all know Suzanne Beagle, who's a leader in this field, who did a bottom-up study recognizing that public and private equity plus gender bonds is about 9 billion. So we've got quite a difference between the two. And I think Julia B, who just spoke, will see that these investment products that are coming around are very, very broad. Again, explicit versus implicit. And what matches you as an investor needs to be defined by your strategy. And you can find things in different asset classes if you're looking for public equities or private equity. And it's not just women entrepreneurs. And not just women in boards, but across the value chain, across the staffing processes, across marketing, products and solutions. And it's a remarkable, again, to repeat the most important point here, it's a remarkable productivity and performance enhancer, risk mitigator, all these things. This is not something to be missed.
Thank you, Hedda. You mentioned one thing already, which is the financial performance of it. So after, getting warmed up with this topic, we'll dive deeper into the investor's cause or in the business case, what we have in here. So it looks like investors really look into that business or in these type of investment solutions a bit more. So in terms of financial performance, Julia B, would you be able to say how do they or those investment solutions compare?
Sure. So at ICE ESG, we actually just looked into that. as you all know, when the coronavirus hit us, it became very obvious very soon that countries that are managed by women had lower issues. So they had lower rates of infection, they had better management of infection, and there was also sooner response to it. So we thought, okay, if this is working for entire countries, how is this working for companies? And of course, we are not the first people to ask that, but nevertheless, we looked into it. And because of the data that we have available, we looked into the whole year and we saw how the setup was. So what we looked into was in the US for gender performance, for good gender diversity, what is the financial performance of the company? And we saw, okay, for 2020, it is actually linked. So if you have a high gender rating from our ESG data, you usually also have a high financial performance. Of course, 1 year is not a lot of time to look at. So we expanded that focus and we said, okay, let's go beyond that. Our data in gender reaches back to 2016 on a comparable level for a lot of companies. So we looked from 2016 to 2020. And we saw again, if you have a lot of diversity in the companies, you also have a higher performance. In terms of diversity, what do I mean? I mean women in management, women in decision making positions. So really having an effect as a woman, having an impact on what is being discussed. From there on, we said, okay, this is the performance question, but as a financial data provider, we are not only interested in the performance, what about the quality? So we looked into EVA quality and we matched the performance of the gender diversity and we mapped the EVA quality with that. And we could see from 2016 to 2020, it is directly linked. So if you have a very good diversity in a company, you also have a very good quality for that company. So this is already great. But then we said, okay, what if it changes? And both if the gender diversity goes up or if it goes down, you can see those effects a couple of months later within the company. So if the gender diversity increases, the quality increases as well, and the other way around. So I think this is pretty magnificent. Of course, from an ethical perspective, it is non-negotiable that you have to invest into women as well. It just is what makes sense. But to be able to show it is also financially very important, I think that is very useful.
Perfect. Thank you for the details. We are looking into what changes are required soon. And the next question I had for Hedda anyway, and I can see that our audience is listening to us because it's a similar question. So I'll take that right now. Is you mentioned you have included diversity when investing. Could you elaborate more how you do this? Which is perfect to that what we wanted just to share now also. When gender lens investing can become quite a box ticking exercise for companies. So Hedda, over to you as an investor.
Sure. The box ticking is that 800 plus billion that US SIF has claimed has gone into kind of a gender, at least approach or questionnaire versus the 9 billion that I think we can say has more explicit lenses. I can't help myself but just to follow up on what Julia said before regarding there's so many studies and reports. I wish we didn't even have to discuss the evidence about diversity, and for any of you out there that want to get more information, Jackie Zahner has an incredible website where she has 650 reports, which can tell you about the performance and the resilience across asset classes and all the reasons, again, the social, the moral imperative of it, all the way to the business economic imperative and opportunities. So do your research. I mean, Morningstar, McKinsey, Calvert, all these organizations have fantastic publications on the business case and the performance of organizations with diversity. And I will remind you that putting women into these positions and getting a gender lens will help you leverage diversity in other domains as well. And the more diversity, the better the performance. So just starting with that. As for the more explicit question, how I include diversity in my investment strategies, for public equities, for the ETFs that I'm investing in, obviously I'm looking at the existing data from wonderful organizations like LEAP that provide an understanding of women in leadership. When I do my direct investing, because I do quite a bit of angel investing, I do have either women entrepreneurs or very diverse teams, the very gender balanced teams. And they, in my 20 years of early stage investing, have always outperformed the homogenous teams. So that's my own anecdotal data. And on top of that, I also have some organizations that I support, like Vodafone, F-Lane, who looks at women being the beneficiaries of a product or solution. It could be quite a predominantly male team, but they're trying to develop a product or solution. And again, that's what Catherine was explaining with the different lenses. So you can look at leadership, and you can find easy data on board level, executive level. Then you can get a little bit further and look at how the workplace equity is happening, if you can get hold of that data. And the smaller the organization and the more aware they are of this issue, the more they're going to publish on it. And then you can look at their marketing material, their products and their services. And then also don't forget women as investors. As Catherine also mentioned, the investment process. You can have a gender lens claiming team that actually has a full team of males. And that doesn't really correlate to the mindset of what we need to move towards to capture the new face of capital and the investment process. I hope that answers your question. I think I went around. I wanted to pick up on some of the points that the lady said earlier.
Yeah, great, perfect. So, and that brings us also to the next level of we find all the data, the business case is there, but what actually are the changes that are required in our ecosystem to allow for that more gender smart investing, both on a short term, maybe the low hanging fruit, as we always name them, or then in the longer term. Julia, Profeta, what do you think about that?
I think I would start with piggybacking on what Hedda just said around like capital. I think that a big part of this big puzzle is truly tackling those that know, like they tell where the capital flows to, so like being aware that we need to have more women investors in all kind of like different levels for all kinds of assets. So like I'm much more focused on early stage and tech investments, so like venture capital kind of investments. And we still like see that it's around like 10% of like women, they're actually like sitting at the investment committees, that are have like senior and partner levels. And this is truly a problem. So how many times I've heard about cases where simply like investments have not been made because the partners that were like all males, they didn't really get the issue, they didn't get the opportunity, they didn't get the entrepreneurs, right? So I think this is like the first thing that we have to be super aware of. How is it that we make sure that the capital managers actually also become like more and more like diverse? And like women are the first step into this journey, right? So of course we have like all the other underrepresented groups that also need like a place at the table. And here I would say that it is still like a pretty much like men's club still, right? So there is also this kind of like thinking that we have to change, that if we have a more like gender balance or more gender equality, that it's going to be benefiting women alone, which is not true. Everybody benefits of having like more women at the table. So I think this is like the inherent change that we need to see in the ecosystem from like a capital provider perspective, that we have to open up more and just like understand that's going to be better for everybody. And I think that just like one more point around what Hedda, I think, like mentioned regarding like products as well, right? So I think that when we're looking at what kind of products that we want to invest, what are like the benefits that they're bringing for like diverse groups of customers at the end of the day, and not forgetting that we are customers ourselves. So either we are like investors from like, like a professional perspective, but if you're like working for like an institution, then you just don't have like so much power of like changing much. You still can like tell where your money goes to, where your purchases are going to go to, because this is also the kind of support that you're going to be showing to companies and theses with your own money. And like we know that the consumers also have like a big part to play here.
Right. And Catherine, what are the long-term requirements where we must start now to actually allow some time for this change?
Well, listen, I mean, I just love everything that Julia shared. So I think to build on that, you know, in terms of the change, it has to start from within. So 4% of leadership positions in the investment management industry are women, 3.4% of private equity assets are managed by women, 1.5% of assets under management in hedge funds are managed by women, and 2% of mutual funds are managed by exclusively female managers. So, and some of you may have seen this study as well. Very recently, researchers took a look at 135 of the largest VC firms in the US. Yes, I realize this is US only data. International data, comparable data is really hard to come by, and they found of the 10,000 founders, excuse me, who received VC funding from those firms, more than 90% of them were men, and just about 1% were Black. So to Julia's point about the broader DEI agenda, and you know, it's shocking and it's shameful, but it's also expected. And I don't mean because of sexism and racism; those are alive, of course, and well today. But because of a far more mundane driver of human behavior, and that is homophily. Right? This is an extensively researched and proven psychological tendency that individuals associate and bond with other people who are similar to them. We like to socialize with people who look like us, people who share our race and ethnicity. It's comfortable, it reinforces our biases, it creates blind spots that are big enough to drive a truck through. And therefore, that's what I mean when I say it's expected, you know, given that most VC and PE funds are highly educated white men, and this is really coming from a Wharton Business School case study. It's therefore not surprising that the vast majority of founders who receive investments look exactly like that also. So that change has to come from within. But that change is also, you know, sort of being reflected in the world outside. And just as one anecdote to that, and I'm sure that, you know, some people watching and my panelists have seen others, but, you know, Yale's announcement last month, right? They put their more than 70 money managers who are managing the university's $32 billion endowment on notice. If you do not improve your diversity KPIs that we are setting for you, you know, we will pull our endowment money. So institutional investors are starting to ask for this. The development finance institutions that we as an impact investor focused on emerging markets engage with on a regular basis are definitely starting to ask for it. And I think those changes in the broader ecosystem are really critical to start shifting behavior.
Great, fantastic. So I will look at some more questions. So people are very interested in the topic. So the question is, women often suffer under the climate crisis more than men. See you also a gender perspective in climate projects, or should be more specific perspective in the climate protection investments? Who wants to take that?
I've actually looked into this in the past, so maybe I can speak a little bit to it. I've done research in Peru in an area where climate is very pressing. The region is called Huanchaco, so it's right between the desert and the sea. But due to the geographical consequences, you have a lot of dryness, you don't have water. In the shanty towns, you don't have electricity. So women, they try to manage, but then you have the combined factor of gender. So these women are women who at the age of 28 already have 5 children from different men who are trying just to be able to feed their family, to get on and to survive within the very sexist issues that are in place. This is an area that needs protection in terms of climate. You need to make sure that the oceans are clean, that the area is maintained. But if the first thing that comes to your mind every day is, how am I going to feed my children? How am I going to take care of my society? climate is left aside. So they don't really go without each other. You always have to have both in mind. And if you can manage to concentrate both on climate and on social issues, in the end, you really have a sustainable package. So I think in general, you can't really separate them.
Yeah, perfect. Hope that answers the question. So, and also we Hedda and Catherine, sorry, they named a few of the studies and data that are out there. So we make sure after the panel that we share that with the audience. So it's your homework for the weekend to go through all these reports and get to know more about it. Okay, we have another question, so I'll just go on with that one. Records show that men get investment more than women. Do you offer trainings to help women to sell themselves better? Is that a Hedda question or Julia?
Maybe I can just like say something. So just like going back to like my comment around like who owns the capital and who's making the decisions, we're saying that it's like many more men. And like, I think that Catherine really highlighted additional like numbers, which says that men tend to raise more money because they're talking to more men as well, right? So if we're talking about like women selling themselves better, we're also talking about like making women fit into a box and a communication perspective from like the men's side, right? So I think we have been doing a lot of work for the past decades of like women that have like have made it and have like adopted a new kind of like language and body posture, etc., that really made it through, but by embracing male standards. And here, like my provocation is like, should we try to become like more men and sell ourselves the way men actually do? Or should we also embrace another kind of like perspectives, like similar to what we see happening with the leaders in politics, where we've been talking about feminine leadership? It is a different kind of like approach, a different kind of like selling. So here's like the question mark, what kind of training should we be then giving to women, right?
I'm gonna need, oh, sorry, go ahead, Catherine, go ahead.
Are you sure?
Yeah, please, go ahead.
Well, so I actually wanted to say I'd love to turn this question around on its head, because in fact, and there's such a fabulous article, and I can put it in the chat in a moment, in HBR from 2017. I really encourage everyone to read it. It is called, I just found the title, Re-Recorded VCs Conversations and Analyze How Differently They Talk About Female Entrepreneurs. And the irony is that that's not even what the researchers set out to do, okay, or to study. It just became so glaringly obvious in the course of their research that they couldn't not, they couldn't look away. They couldn't not study it. And so you can guess where I'm going with this. The VC, the interviewer sort of continually questioned the woman's credibility, trustworthiness, experience, knowledge, whereas they commonly described male entrepreneurs as assertive, innovative, competent, experienced, knowledgeable. So, the male entrepreneur looking for funding would be described as young and promising, but the female entrepreneur looking for funding would be described as young and inexperienced. And then further research and studies have shown that actually the way that the questions are asked in those interviews is really is biased, right? So a lot of the questions directed to female entrepreneurs looking for funding is around, sort of prevention and managing risks, and, sort of where a lot of the questions directed to the male entrepreneurs are much more like promotion, sort of getting that share and expansion and da-da-da. So when you approach and listen, and that's the lens through which you're comparing, investment opportunities, again, it's not surprising, that we get the results that we're getting over and over again. So I think the training, not to say that, women can't, sort of practice and particularly become more skilled at turning those prevention questions into promotion answers. But I think it goes both ways, and that a lot of them, there just needs to be, I don't want to say standardization, but we need to be much more mindful of the biases that we bring into the interview process. And I don't know of trainings in that area. I'd love to hear about that, or I think that's a great, sort of market opportunity right there, because it's really needed. So sorry, Hedda, but that's, yeah.
Manuela, may I?
Yes, sure.
May I? Because this one lights me up a bit. I have to, and I'm going to pick up and probably be a little bit stronger, but on the same vein of what my fellow panelists have said. And I'm going to channel another very important voice in the whole gender smart investing world, and that's Joy Anderson from Criterion Institute. Gender-based violence, gender equity issues, it's all about power. It's power dynamics, and that's what you have to address. Now, this is a very complex issue. You can try to put this little frameworks. Let's train women to be a bit more pitchy in this way or that way, and maybe we can solve the problem. But that's putting the blame on effectively a victim of a system where we have and again, it's not about male and female. This is about the masculine and the feminine, and knowing that men have both sides, and there's lots of men with very feminine approaches in terms of nonlinear thinking or what have you. Again, that's a whole different philosophy around gender-based issues. But I think we do not want to try to mold and custom this women empowerment movement to say, well, the women that will succeed are the ones that are acting within the masculine leadership system that we currently have, which is not necessarily particularly supportive or productive, not for performance or nurturing of whether planet or people. So again, this is not a women versus men issue, and this is not the binary of male, female as the questions that are coming up are. This is really a spectrum of trying to understand that we have, as was mentioned, unconscious biases that we're continuously trying to bucket and force a certain system that does not value the diversity, which will then create a lot more value than I think we understand right now. So the example that Catherine gave about the studies in venture capital, we know there's only a couple of percent of money that goes to venture capital for women. We know that there's a $320 billion gap from the World Bank of women entrepreneurs looking for capital that they're not receiving. That's an undervalued asset. You can go at this as a business or a finance specialist. And we know that women of color get even a smaller micro percent of this. So we have to start this behavioral change, which will start making us look at things different. And instead of expecting anybody across the gender spectrum to act in the standard masculine leadership ways that we associate with performance of an entrepreneur, I think we're the ones who are responsible for changing our attitudes. And that's not just the men, but the women investors like myself and the others also need to put on a very different gender positive view of things and question ourselves and move in the right direction. So sorry for getting up on my little soapbox there, but it was a question that provoked some bigger thinking.
Yeah, oh, absolutely. And it's also about role models and showing role models, which is one of our missions as Fondsfrauen, to show these women that are already in the gender lens investing or in the investment and in the ESG space, but also in the asset management space. So it's all about showing those role models for others to be able to follow those. Our panel has a lot of more questions here, so I'm just a bit cautious of time as well. So I'll go on with one or two of the planned questions to kind of make our panel a very rounding it up. And then I suggest that we might look into the questions after the panel and answer them for everybody visible, so nobody gets like ignored. So we'll do it that way. So to finish on our topic, saying, okay, we have the definition, we know the business case now, we have some learning in action, short-term and long-term requirements. Using our glass bowl now, where will this part of ESG be in 5 years' time, Julia Beverunge?
I believe that it's becoming more and more important. In Germany, for example, we've just seen a big quota introduced for women in leadership. This is something that is being asked for. Just like the climate issue, there are young people who are saying this is not something that can go on like this. And we have seen a lot of improvements within the last decades, women are allowed to have their own credit cards, women are allowed to have their own jobs. It's going upwards. Even though within the past years, it was a bit tricky, the trend is still upwards. And because we are so reliant on what regulations are, it is actually a good thing that at the moment, things like the EU taxonomy are happening, where the focus on ESG has been climate in the past, but where we can expect that the social aspects, including a lot of gender issues, will be put at the forefront again. So I think that we can expect a lot more on gender, and that we all have to prepare for it in a mainstream kind of sense.
Okay, perfect. And talking about learning in action, the suggestion we discussed so far and the outlooks from an investor's point of view, are these all feasible, Hedda?
Everything is feasible, Manuela. If we're willing to look at ourselves and really kind of identify where we're stuck in old models that don't serve us as individuals, our organizations, our future, our planet. If we're willing to kind of listen, and the people that are already listening to this session are on that journey, as we discussed. It's incremental changes, being interested, being curious, asking questions, doing a bit of research. We've shared in the chat, and I think Mario is sending them on, fantastic databases of research on gender and climate, gender and COVID, gender and care, and recognizing gender as this movement towards really valuing diversity. We live on a diverse planet, and we're going to have to figure out. And if you're an investor, you can find different tools that will help you on this journey. And I've also put in the pasted in the chat, and I think it'll come out to the rest of you, is a gender equality mainstreaming framework, practical guide, toolkit. IFC has come out with a private equity and value creation guide, fund manager's guide to gender smart investing. Use these tools, get on the journey. You will find that you are going to be building the new economy, a future-proof investment strategy, and doing what's effectively right.
Excellent. So this is a mark for Mario and Hans-Peter to bring us on to this panel again in 5 years and see and compare notes of what's been achieved in that time. Right, we have one last question. As I said, I would love to answer the audience questions at a later stage and also in more detail and share it with everyone. So before we come to our, what I call final statements in the round, one question more for Catherine. Being a product provider, how can we harmonize the understanding of investors and product providers? So we're talking about the same kind of thing when it comes to gender lens.
I don't know. I mean, how does one herd cats? You know, that feels like certainly beyond, you know, my, you know, magical, you know, sort of powers and wishful thinking. I mean, look, I think, as I've said, it's a spectrum. It's a broad tent. I don't know that, you know, we're really served by you know, being, you know, kind of pedantic about, you know, sort of definitions and slicing and dicing it that way. I do think that it is about creating a broader movement, bringing more people into it. These super useful, I mean, Hedda, you've been on fire on the chat, which I'm loving all these resources that are now available. Again, to try and bring, you know, sort of to try and create that harmonization, and the 2X challenge, right, launched by many of the largest development finance institutions. I think including the IFC is a great example of that, where, you know, sort of thinking through criteria and actual steps and resources for fund managers and others. So as not to necessarily replicate for a one-to-one, but so as to create, you know, a bit of a common, you know, kind of baseline and agenda. So that's certainly worth checking out as well. Maybe I can put that into the chat.
Great. Thank you. So we have a couple of minutes left. So I would, first of all, before we do our final round, thank the audience for being really active here. Lots of questions we can answer later. So the topic is really hot off the press for everyone, and I do appreciate that. So I always love to conclude like a panel with a positive note and also some kind of action that the audience can take with them. So if I can ask each and one of you to say, okay, what is your final sum up or your final sentence here, also giving a positive feedback to the audience, how they can implement what they've learned today in a very probably not easy way, but like, okay, think about it for the next months and years to come, how you can change your behavior. I would love to start with Julia Profeta.
I was thinking about like what kind of statement, and I believe we're all already in the impact space, and intentionality is a word that we should all be always looking at, right? So if you're going to be curious, we have to be intentional, and intentionality has to be translated into KPIs. So if we don't start like measuring things right now, we won't see the evolution. So also for the gender related topics, we should all start like really having a look, what do our portfolios look like today? Even if we don't have an active strategy to start like measuring, start like seeing how many women are actually in the leadership of the companies that you invest into, how much of the products and services are being shaped according to gender diversity aspects, and then like slowly get to see that, wow, truly there can be a bit more like value added once we see that products that are performing better actually have this kind of take, companies that have this balance also have performed better. So just start like measuring, start like having a look, and then you might decide what is like best for your own strategy, I would say.
Great, thank you. Julia Beverunge.
Thank you. A question that I'm very often asked when it comes to gender data is, what about the return when we focus on gender? And I think we saw today that the return is fine. So first thing I would advise is don't worry about that. If you have a safe strategy, if you have a good risk strategy, gender can even add up to that. And yesterday during the keynote, what I found very interesting was the point that at the moment we have so much ESG data. It's just too much in that sense. But I think it offers so many ways. You don't have to choose a gender direction that does not fit you. You can actually have a look at the current data, at current KPIs, and say, what is the right direction for me? What do I want to do? And I'm pretty sure you can find it. There was a question earlier also about LGBTIQ investing. It is already out there. It might not be as thorough as you already wanted, but you have the data, you have the measures, and I would just encourage you to use what's out there and to implement it into your strategy.
Perfect, thank you. Catherine.
Yeah, briefly, I'd love to pick up on what Julia said and offer a different lens, which is not a contradiction. On the contrary, it's actually an and, it's not either or, it's and taking a systems thinking sort of approach to this. All those, policies, practices, resource flows that are visible, that are seen, that are quantifiable, that we can measure, it is really important to pay attention to those things. And, in addition to that, we really have to go underneath those policies and practices and resource flows lie more subtle dynamics. And, those are harder for us to see. So I just, my call to action is, or, my reflection is, I encourage us to work on those deeper levels as well. And in sort of systems language, they are relationships and connections. So being thoughtful and mindful about forging new relationships and connections, particularly between those in decision-making roles and those that historically have been less powerful and privileged. So how do women, for example, develop deeper relationships with decision makers and those who control how resources are spent? A second is power dynamics. So how is that decision-making power distributed? Who has formal and informal influence? Again, how can women be given a seat at the table when decisions are made? And then the last, and in many ways, the most important is mental models, right? And these are the prevailing beliefs, biases, norms that shape how we view the world. And, that this is not profitable, or, sort of that I don't believe, get the business case. That's a mental model. There are a lot others in this space in particular. But it is, I think, interesting, an interesting exercise for us to think about what are the prevailing mental models that dominate the investment world, and particularly with respect to gender lens investment, and what is required to shift those models. Is it more facts? Is it more business case? I doubt that. But what's important for us to keep in mind is that there's interdependence between these dynamics, right? You can't expect to only shift, the policies and the resource flows without also addressing what lies beneath mental models and power dynamics. So that's just my encouragement for us to work at all three levels simultaneously.
Thank you so much, Catherine. So Hedda, your last 2 minutes to sum it up, and then we're finished.
Not much to add. I mean, I think my panelists had really compelling and important angles for you all to consider. So I can only just reiterate what they said and mention that the links to the reports and the studies on gender, climate, COVID, everything will be coming out, I guess, in a follow-up. So where I was on fire in the chat, Catherine, it wasn't actually coming out. So I have to stick to my fire here, and can only say that when I work with investors to develop their impact investing strategy, I try to find things that piss them off. It's really a funny strategy. Find things that make them really angry, and you work from there, because we're very social-based animals. Now, this is a human rights issue at its base, diversity and gender issues. You can start from that point and understand the power dynamics and understand the system that we're in and what we need to build to move forward more sustainably. If that's not your journey, if you wanted to sit and look at this from a business or an economic perspective, you can do that. It's got, you have all the studies in the world to help convince you that you need to put a gender lens on your investment strategies or your business activities. It's out there. Take what you need to start moving in the right direction. You know that there's people like us who are passionate about it. We have tools. We're happy to help you on that journey, and get moving. We got a little bit of an urgency to address, so can only encourage you to keep being curious, asking questions, and moving in the right direction.
Perfect. That's a very, very great last words, Hedda. So again, as we already mentioned, all the information will be shared afterwards with the participants. Ladies, I like to thank you very much for this lively discussion. I hope our viewers enjoyed this as much as we did here. So, dear audience, if you like it, please fill in the feedback form, which is also online. If you didn't like it, please tell only me and nobody else, please. I would like to wish you all an interesting rest of the conference. And I have some announcement, as there is a break now. I think everybody has earned it. So there will be a break, and the next panel will be Sustainable Agriculture, Blue Economy, and Food Tech. Another interesting topic, and that will start at 11:30. So have a great coffee break, everyone. Thank you for the panel. Thank you for the audience, and bye-bye.